Good afternoon, everyone, and happy Friday. Welcome to the market close report for Friday, the 13th of February. Well, not a good day for the Aussie market at all today. In fact, the ASX 200 had its worst day since Friday last week, down by 125 points or 1.4% to 8,917. And that means we've once again fallen back below that key psychological level of 9,000 points. Now, is today's moves surprising? Not really, partly because it follows a pretty hefty decline out of US markets last night. We've also had a pretty good run in markets this week. So just yesterday, we had the market getting very close to a record high. We in fact saw the ASX 200 get 10 points or 0.1% away from an all-time high. We also just cracked 9,000 points on Wednesday for the first time in 3.5 months. We also ended up having our best week since May last year. So in 5 days, we've had the index actually lift by around 2.5%. So we completely made up for last week's declines, which were around or very close to 2%. So it is kind of normal market behavior and psychology when we get to these important psychological levels, 9,000, 9,100 points, close to record levels, for markets to get a little bit nervous and just need to take a bit of a breather. And that's what we saw take place today. Now, as far as sectors go, at least today, we had some pretty big declines in certain sectors. Tech was easily the worst. It's come under a lot of pressure for a while now. So renewed concerns around AI disruption and valuations as well. 5.4% lower this week, in 7th straight week of declines as well. We also had some pretty hefty falls for healthcare, which was down by around 4% just today. Mining stocks not doing well. They were down as a group by around 2%. That's for the materials. That's with commodity prices mostly lower. So copper, gold, oil, iron ore all went backwards. At the same time, the US dollar strengthened a little. So in generally speaking, that can be a bit of a weight on commodity prices. There were winners, just two of them. Utilities, which is one of our smaller sectors, up around 3.5%. That was mainly due to one of the heavyweights there doing well, and property stocks also managed to lift by around 1%. Let's look at some specific names, because we've got AMP lifting by around 9% today. It was the best performer. Sounds great. The only thing to note here is it was down 26% just yesterday after disappointing with an 11% slump in profit. So it was hit by one-off cost and the settlement of 2 legacy class actions too. ANZ Group was up 1.3%. It's been a massive week for the banks. Of course, just a reminder here that CBA was out with its results on Wednesday, which beat expectations. Profits up 6%. That saw its shares lift. It was one of the best performers of the week. In fact, it made it on the top 10 list this week. ANZ and Westpac actually both hit record highs today. NAB yesterday hit a record level. So we had a couple of quarterlies coming out from the major banks, and in addition to CBA's half yearly, that was enough to see those stocks generally do quite well this week. IAG up around 1%, but the insurer tumbled almost 7% yesterday, and that was after handing down quite a significant 35% drop in earnings. Damaging storms in Queensland was a big reason there, a contributing factor to the surge in claims over the half. So severe hailstorms late last year was a reason, and Origin Energy was the big factor really. And driver at play for the utility. So it was up 5%. First half profit did drop back for on the half, but it did raise guidance for annual earnings, which was a reason for the gains. Now, as far as the losers go, some massive movers here as well. One of the worst performers was Austal. This is the shipbuilder. 22.8% lower. Now, it released a short statement today saying that it overstated its potential profits for the year, and that was relating to its US subsidiary. So basically, it reckons it's going to need to cut its profit forecast by about $35 million. What a run it's had, and not for good reasons. In fact, it's improved just twice in 21 trading sessions. Nick Scali, the furniture group, down about 22%. A rise in profits and a lift in dividend was the good news. The bad news, it disappointed with its sales for January. So the market is a forward-looking beast. So better results are great when we look back at the past 6 months, but signs of a slowing sales, which is what we've seen, tends to trump that, and that's what we've seen today. Now, Cochlear down almost 19%. This is the hearing implant maker. The lowest levels it's been at in about 3 years now. There's been delays in its new hearing implants and lower than expected first half sales, and that's led it to warn that profits are going to be at the lower end of guidance for the year. And finally, WiseTech in that tech space. It's had a shocker, 10.4% lower, 40% lower just this year. It's on the receiving end of a price target cut this morning. So it's been caught up in this whole AI sell-off, which has really hurt software stocks in general, not only in Australia, but also globally. So have to wait a couple of weeks still to get its latest results. Now, looking forward, the reporting season is now going to really get into the busiest time of the entire year for half-year results. So over the next 2 weeks, we'll get more half-year numbers than any other time this year. There's going to be some really big names next week in the mining space. BHP and Rio will be two that will get attention. You've also got PLS, the company known as Pilbara in the past, Santos, Whitehaven, Mineral Resources as well. We've got healthcare stocks like Ansell. We've got retail companies like JB Hi-Fi. Telstra will be out. And we've also got some in the financials like Bendigo and Adelaide Bank, Suncorp, QBE, Zip. So it's going to be massive. That's likely going to be a driving force of markets in the coming weeks. In particular, we've already seen evidence of this and some massive moves in share prices over the past couple of weeks as well. So it's just a reminder that there can be overreactions to news, to outlooks as well, and it can be both a buying and selling opportunities at times if you're prepared. And also next Thursday, we've got an Aussie jobs report out for the month of January. The market's expecting about 20,000 jobs to have been added, so that's one to watch. As far as currencies go, we've got the Aussie dollar sitting at about 70.6 US cents. Did weaken as well against the euro and also Japanese yen. Have a great evening, everyone. A fantastic weekend. We look forward to speaking to you next week.